Hello, it's Steve Kalem. Thanks for clicking in. I'm making this video for those that I'm sending an actual application to, but also as a general informational and educational piece. So these are general numbers that you can follow through with the numbers that I send you if it is an application, and you can follow this through. This is a government form, the good faith estimate. And if you know anything about government forms, you know that they're consistently confusing. So I'm going to walk through this with the general numbers and hopefully answer a lot of the questions that we get every time we send out these forms in an application. Give me a second, I'll share my screen, and here we go. Okay, so it's a 3-page form, and the first page is the general information of your purchase price, in this case 1188, and the loan amount, in this case it's an 80% loan, 950,000, and the rate. And it's broken down to your payments, which includes principal interest right here, and escrows for taxes and insurance. And that's included here for the total payment there of 6206. We're breaking down what we're estimating at this point are the escrows of taxes and insurance, because you don't have your homeowner's insurance yet, and we're not quite sure of the taxes on the property yet. It may adjust after you buy the house. Okay. Costs at closing, these are very confusing. We can come back to those at the end. The best way to deal with these fees is to go to the next page and look at the exact fees and itemize them so you feel comfortable with what you're paying. So let's go to that page. Okay, the second page has all the detailed information. The left side is made up of A, B, and C, and A and B are the lender fees. So these are our fees, and these are appraisal, credit report, flood cert, tax service, all the standard fees that we have, and these are firm fees. The next batch is C. Those are estimates, and they are high. These are your settlement company or settlement attorney's fees. We don't know who you're choosing yet, so we're not sure of their fees. But we're going to estimate all these fees as high because due to the financial crisis situation, compliance regulations, if we're short on any of these, if we estimate them low, the banks are on the hook for the discrepancy. So on all these forms, the bank is going to estimate all the fees high, and you can get a happy surprise at the end at closing, because typically things are a little bit lower. So in this case, these are your settlement attorney's fees, but the settlement attorney includes title insurance for the lender and typically for the owner. For the lender, it protects us, the bank, in case there's any defaults or judgments on your property. And the collateral for the loan is the home. So we want to make sure that we're insured in case something happens and there's not clear title. So that's forced on you. You must take that, otherwise you won't get the loan. However, you don't have to take the owner's title policy, and that's why it's over here in the H section. It's strongly suggested because it also protects you for your down payment, and in case there's any defects or any tax, any implications, you're covered on that. But you want to talk to the settlement attorneys about what you're getting there, and probably talk to me. I'd love to go over that with you, because there's ways of saving on this that we can talk about individual to every case. So these are your settlement attorney fees. Those are the fees involved in the process, but then you also have the government fees. Welcome to the neighborhood fees. So those are your transfer and recordation. And as we said before, the banks are concerned with compliance because there's billions of dollars of loans that they're doing, and they can't be worrying about having something short and having to pay fees. They do pay fees, but they're trying to minimize them. Fines is really what they are. So this number here for transfer and recordation is split by the buyer and seller, typically 99% of the transactions in our area. However, on the forms, the banks allocate 100% of the cost to the buyer, because in that small 1%, that typically is a builder transaction, that the buyer is going to pay the entire amount of transfer and recordation. They want to make sure that they've covered it. Otherwise, if they quote too low, then they're going to have to pay the remaining amount. So they're going to quote the double. And actually, recently we've seen some buyers paying both sides of the transfer and recordation as a negotiating ploy. So in any case, in this case, and in every case, clients call me and say, these recordation taxes are way too high. And that's because it's double of what it should be. In this case, 34,640, the actual recordation tax is 17,320. Okay, so that's a big discrepancy that you need to be aware of. Okay, the other big question that always comes up is with the homeowner's insurance. Why do I have to pay a year's full of homeowner's insurance up front? Well, everybody, including you and the bank, wants your home to be insured in case, God forbid, anything happens. And the collateral for the loan is the home. So all the banks require, if they're doing a loan, that you have insurance in place on the home for 1 year from the date of settlement. So either you pay for that 1 year policy while you're in process and you provide a paid receipt to the bank, or you don't pay, you provide the invoice and the banks will bill it at closing, the 1 year policy. So in this case, they charged for 1 year, 12 months that, and we billed it to the client. Okay. In addition to that, what happens is that every month, we already said the escrows, you're paying 1/12, 1/12, 1/12 of your escrows, which includes the homeowner's insurance. So you're making the payment, I should say you close on the home, and then you've got 1 year in place, then you make your first payment, your second payment, your third payment, you're paying 1/12, 1/12, 1/12 of the homeowner's insurance. And on the anniversary date of that first payment, you're going to have 12 months in the kitty, and we, the bank, are going to pay that for you. So you're always going to pay 1 year prior at settlement so that you have it in place. And every month you're going to put in 1/12 so that in the anniversary, we will have the home insurance for you. Additionally, you have to pay on the loan until the end of the month. If you close on the 15th day of the month, you may have to pay 15 days of interest. If you close on the last day of the month, you have to maybe pay 1 day interest in this case. It's not more or less. You just need to pay interest on the loan from the day that you own the home. It's not a cost, it's an obligation. Similarly, with the property taxes, when you own the home, you are obligated to pay property taxes. Taxes in our area are collected twice a year. And so there needs to be enough in the kitty so the bank can pay that full 12-month amount within the next year. But depending on when you are closing the cycle, the first payment might be very soon. So typically there's 6 to 8 months which are collected upfront, and that way that there's going to be enough to pay the first 6 months whenever they're due and accumulate enough for the next 6 months when those are due. I can walk you through that on an individual basis. Most people are comfortable with that. Okay, we already did H, the title insurance. And so we're adding everything else up. I put this in here, by the way, under J, showing that we have a really great benefit if you open up a checking account at no cost, no minimum, no obligation to really use it. We'll give you $1,000 credit. It's either 0.25% of the loan amount or $1,000 towards your closing costs. No one has not taken that, so that would show up here too. Okay, so now we're trying to figure out how much you're going to need on that magic day, on the day of closing. So the closing costs we added up were $54,908, which we already know are about $17,000 too high, plus the other ancillary fees that are too high. But that's the number on the form here. Okay, you put 20% down on the purchase. So that's the 20% down, and you already anteed up an earnest money deposit to secure the property with the seller. That's been sitting there in settlement, waiting for the magic day. So your 237 minus the 125 is 167. Okay, that's what you're going to owe on here. Okay, lastly, there's one other thing that's not a fee, but it is an obligation. When you own the home, then you have to pay for the insurance, I said already, and the taxes and maybe the utilities or whatever else the seller may has paid in advance. The seller paid maybe for the taxes in advance, but now you own the home, so you have to reimburse them for that number. That number, if that's the case, does not show up on your settlement fee. And at the end, people are counting every dime sometimes because where they're very tight. You've always got to accommodate some extra money because you may have to reimburse the seller for things that they paid in advance that you now own the home. Okay, I'm going to stop the share. Hopefully this is helpful. It's a ton of information. It's confusing. I went in very detail. I went through each thing in detail. So give me a call if there's any questions. Happy to go over in the individual case. It's there's no stupid questions. It's a stupid form actually. And so happy to be a resource for you on that in any way, shape, or form. Okay. Thank you again for following. If you're still with me, I really appreciate you and looking forward to working with you if we are, and being a resource for you if we're just giving information. Thanks again. Bye-bye.